This is your weekly real estate update for Greater Portland, Maine. These are closed numbers in the last 7 days, median numbers. Days on market came up quite a bit, 43 days on market. The list to sale ratio back at 100%. Sold price shot up to $419,000. Your average 30-year fixed interest rate came up just a smidge to 6.10. And of course, US inflation at 2.68%. Three things I want to talk about today. The first one, GDP. Next one, job numbers. And then the last one is the new selection for the Fed chair. So GDP numbers came out for Q3 of 2025, 4.4% growth in GDP, which was more than expected. And that was 2 quarters in a row where we had more than expected. And it sort of is weird when compared to the next number, which is the ADP numbers. So job reports came back, about 30,000 jobs created according to ADP, which is anemic, super low. So you have growth in the economy, but then you have not enough or way fewer than expected or desired jobs. Definitely worth keeping an eye on. Seems to be a little bit of a trend. Is that because of efficiency? Is that because of AI? Is that because of job replacement? If we keep seeing activity and growth in the market, but less jobs, long term, obviously a problem. So moving on to the last thing here, the new Fed chair. So his name is Kevin Warsh, who Trump named as his selection, assuming that goes through. Interesting character. He served during the 2007-2008 financial crisis. A lot of people had concerns based on Trump's rhetoric and activity that he was going to name somebody that he could make his puppet, and that there was going to be interference between the executive branch and the Fed Reserve, or more interference. But Warsh doesn't really look like that selection. When he served in that time period, a ton of change and oversight was done. More oversight. It was definitely a conservative period for the Fed. So that's what he comes from. He has a record of wanting definitely independence of the Fed and a record of a pretty fiscal conservative perspective. So when he was named, the reaction was that a lot of commodity prices dropped off because people who maybe had their money sitting there to protect it moved it back over to the bond market, which improved. The US dollar improved. The stock market took a little dip, but not bad. So overall, the reaction was, okay, maybe this selection is not crazy. Definitely still yet to be determined, but it looks like probably we're not going to get a ton of rate cuts in 2026. We're not going to get this super tight relationship between the executive branch and the Fed. And we'll see what happens in May. But overall, it seemed like a good selection in terms of how people peripheral to it reacted, and not an overnight like, oh, this is horrible. I hope this stuff was helpful. If you have questions, let me know anytime.